So again, my name is Dan. What was your name?
I'm Paul Hickey.
Paul Hickey. I heard you like 3 times, and I was like, I'll remember it, and then now we're here.
I get it.
Yeah. So that was cool. Just introducing you to the guys at Soon, but I'm interested to know more about. You have 2 projects, right?
Correct.
Yeah. So let's talk about the capital, the Green Moose Capital.
Green Moose Capital, yeah. So Green Moose Capital, we set up September of 2022.
Okay.
We started the fund. This is a mouthful, but it's a delta neutral DeFi income yield hedge fund. And if we break that down, it just means that delta neutral means you go long and short and neutralize the asset. So if the market goes up, you don't make money, but if the market goes down, you don't lose money either. So what's the point in doing that? Well, if you're in just pure equities and you did that with Apple, you would make no money. There's really no point. But in decentralized finance, where you can own an asset and you're getting paid yield for liquidity providing and for staking and all the different things you can do in DeFi, then you can neutralize that asset and collect quite a bit of yield.
Yeah.
And that's what we do. And so 100% of the fund is delta neutral. A lot of delta neutral funds and market neutral funds aren't what I would call true delta neutral. You know, like in equities, a market neutral fund would be like, I want to be market neutral in the automobile sector, so I'm going to long Ford and short, General Motors. That's not a true delta neutral because they can move different directions, right?
Right.
So in our instance, a good example would be like Atom, which is a token in the Cosmos ecosystem. We'll go long that 50,000, we'll go short that 50,000. So it doesn't matter if it goes up and down. Our principal stays the same at 50,000, but now we're collecting like 29% yield on it.
Right, because the yield has come. Yeah.
Yeah, we'll take it and stake it, right? And so that's all we do in this fund. So it's in the crypto world, it's pretty boring.
Right. Right,
About a year ago when the market crashed, before the market crashed, and I was telling people about this fund, we're shooting for 20%, and they would say 20% a month,
Right.
It's
Yeah.
like
Yeah.
20% a year, boring.
Yeah.
But now with as volatile as the market is, having an investment where your principal is safe, it stays the same no matter what the market does, and you can earn, in the 20% range. We don't guarantee the yield at 20%, it varies.
Sure.
But that's been our average over 9 months. That's a really good deal in the market today where it's so unpredictable. And it's also a good investment just long-term to have part of your portfolio in a nice income investment. That's why a lot of people like real estate, because they can make 8 or 10 or 15% on an ongoing basis with an asset backing it. That's essentially what we're doing. We've got an asset backing this yield.
Yeah.
Because of the way we long and short it.
Right.
And then you're getting yield on top of it. So it's a nice, boring, good long-term investment.
That's what you want, though, right?
Yeah.
That's the safe stuff. And
Right.
crypto, I mean, this is kind of the thing right now, is that it's boring, but it's safe. And
Right.
that's some of people's upset tummies coming into crypto, is
That's
how volatile everything is.
Yeah,
Right?
yeah. We're just in the process of starting the fundraising, and because we've just needed to establish a track record, and it's interesting, the people in crypto, they get it, they like it, they see it as, oh, this is a good place to take part of my portfolio that I want to be safe with and throw it in there. The people in TradeFi, the traditional finance guys that aren't in crypto, they look at it and it's too good to be true, because you can't get 20% market neutral. You can get 3 or 4%.
Sure. Yeah.
In equities.
Yeah.
You can't get even close to 20%.
Right.
So they're trying to figure out, why does that exist? And well, it exists because we're in this new market. There's all of these new tokens and protocols need to attract capital. They need to offer really good incentives to attract that capital. And so it's not forever. It's not going to be available for 20 years. I think we've probably got 5 or 10 years of this. Who knows? Who can predict? And where we're going to be in 5 years? I don't know.
Yeah.
But I'm pretty confident we're going to be in a good space for 5 years doing this. And it's kind of fun getting in front of people and talking to them about it.
What do you think the future of funds like this looks like after that threshold? Just back to the regular 3 to 6% annual traditional stuff? Or?
It's a very interesting question, because the more money that comes into a sector, the more efficient it gets.
Yeah,
Right.
sure.
Now, during the growth phase, if we go from $1 trillion to $5 trillion in crypto value over the next, 3 years, which could happen, then even though we've got a lot more, we're a lot bigger, there's still going to be lots of incentives going in all different directions. But once you get to a certain size, things start getting a lot more efficient. This is where AI comes in. That could be really disrupt what I'm saying in a much faster way.
Yeah.
Because AI has the potential to come in and make a lot of the inefficiencies we're taking advantage of and make them more efficient.
Yeah. Right. Yeah.
So it could collapse it. And on the other side, it could open up a lot of other opportunities. On the pure equity side, my prediction on that is smart guys are going to figure out AI and how to make money with it. And they're going to make a freaking ton of money, and the government's going to come in and go, oh, you can't do that.
Right. Yeah.
Sorry.
Yeah.
Or everybody's going to be able to do it.
Yeah.
Everybody has to be able to do this because it's not fair. That's a scenario I think that's going to play out in the next year or two. We'll see. But with crypto, it's so hard to predict the future in anything nowadays.
Right.
5 years ago, what we're doing, or 5 years in the future, what we're doing now may not work, but there may be 5 other things that are even way more profitable and that we can figure out how to neutralize. Yeah.
So you said you were doing internal capital first, right?
Yeah.
And are you opening that up soon now?
Yeah, now we'll be opening up to outside investors probably July 1st.
Okay. And in the name of like the decentralized nature of it, do you have like a minimum buy-in amount for people who want to get in on DeFi?
Yeah, it's for accredited investors.
Yeah.
U.S. investors can invest in this, accredited investors, so it's a $50,000 minimum. We can make exceptions to that depending on the person, but that's the buy-in right now.
That's the standard right now. That's awesome. That's cool. Yeah. And then what about the other project?
Yeah, so we have this strategy company called Define Logic Labs. And we create trading strategies, and we've partnered up with another trading strategy company called 7Cs, and we have created a vault that is on the Sommelier protocol. And Sommelier Finance is this brilliant protocol that was created so that strategists, you got a trading strategy you want to put out there and have other people put money in the vault and then make a percentage. You can do this with Sommelier. Now, the way that
interesting.
Yeah, it's really cool, but you have to get approved by their governance board. So they won't just put anything on there.
I see.
They'll take a look at it, they'll evaluate it, and they go, okay, this is legitimate. The smart contract looks good. They check a lot of boxes before they put something on there.
Do you come with the smart contract, or do they help generate that with you?
They will help. They will allow you to bring it.
Okay.
They're going to have to review it.
Yeah, sure.
But 7C's, our partner, they actually created the smart contracts for these vaults. And they've been very helpful in partnering with us to do this first vault. And the first vault is called Real Yield ETH on the Sommelier contract, Sommelier protocol. We have about 6 million in TVL right now. It's only been open for about a month, maybe a little more. And it's paying out about 11%. It is the highest paying ETH vault in the marketplace.
That's awesome.
And the thing that makes this vault really unique and different is this is the only actively managed ETH yield vault. And what I mean by actively managed is all the other vaults are a smart contract. You put the strategy in place, it goes. And then typically the yield starts to come down, sometimes in a short period of time, sometimes a little over a longer period of time, because that strategy was, hard coded into that smart contract, and then it just goes until it stops working.
Yeah.
Our vault is actively managed, so we're adopting with the market and changing with the market, and this is the way the Sommelier protocol allows us to work with it, and which is why we decided to partner with them, which is why we get a better yield, and why we believe going forward we'll get a better yield than pretty much the rest of the marketplace.
That's awesome.
So yeah, it's really cool. And my two partners that created the strategy along with 7Cs, they're just geniuses in the space, and they're really well known in the DeFi space, and they're the brains behind it.
Yeah, that's cool.
They're the brains behind it. They've got a second vault coming out in a week called it's a Real Yield Bitcoin vault.
Okay.
Real Yield BTC.
Yeah.
And it's going to do the same thing for BTC, probably get about 6%. We don't guarantee the yields, they vary. But that's really good for BTC. Most people are getting, 3%, 2% if they're
Right.
trying to get any yield on BCC.
Yeah.
So if you're long, those 2 vaults are perfect for people that are long BTC and ETH. If you're holding ETH because you think in 3 years it's going to be worth $10,000, and you're in BTC and Bitcoin because you think in 3 years it's going to be worth 100 grand or more, and you want to just stake it and earn some yield, these 2 vaults are the place.
That's awesome.
Best vaults in the market at the moment.
Yeah, I'd actually be really interested in that, because I know a lot of ETH hodlers right now.
Yeah,
so-
yeah, there are a lot of ETH. I mean, they're giving BTC a run for the money
Yeah.
for the hodlers.
Yeah.
Yeah.
So
sure.
I'd love to get that info from
Okay.
you. Let's make sure that we get let's get some contact info
Okay.
so that we can make sure that we're tagging you in all the right.
Okay, cool.